Welcome to Trading Lounge and the Australian report for Monday, August 29. Okay, so the ASX here. We're pretty much on track with things. We were looking for this B wave here. We're also looking at a possible wave 4 here. I think we need to sort of take that wave 4 off at the moment, but we'll just see. I mean, we could have an A, B, C here for wave 4 and then go up, but I'm thinking that this move down here is wave 1, and then we'll go back for 2, 3, 4, 5, and we'll have 5 waves here. So we'll have an A, B, C for the A wave, a B wave, and a C wave. It is possible that that we could shrink things down. I need to look at everything, so I could shrink this to here and have this primary wave B here, and we could just come straight down from that point. So I'll keep an eye on that, but I'll just stay on track here with this. So the two counts that are possible at this point are that we go the ABC down here and we have 5 waves between B and C, or we just keep on going down at this point. I won't know that until we finish this 5-wave structure within this space here. The other point here too is that the market could pull back to the 50-60%. So that's deeper down here. Will it get this far down? I don't know. All we can do is just count the waves as we go. So that's what we'll do. So let's just move into the 4-hour chart. Where's that? Here. So this is where we were last time. We're looking for that top here somewhere. We'll just pop that in. We'll check it on a smaller time frame. But what I do need to say is I know from looking at the US markets that we've got wave 1 here. It may or may not be finished, but it's close to it. And then we're going to have a an ABC pattern. Look, normally they come back 50-60%, but because we're at the 7,000, it'll be a little bit sticky, that number. So yeah, and then we'll have wave 3, 4, and 5 now, something like that. So I'm going to remove this wave 4 here as possible and plausible, but probable not. So let me just put this A wave in here. So that's that. So that's really where we're at the moment. I can just borrow these here and put wave 1 here and 2 here. That shapes up a bit better, so that's what we're looking at this stage. Wave 1 was quite big, so that might even be the extension, because normally wave 1, 3 or 5 has the extension in it. Most cases it's wave 3, but because of the Jackson hole, all the markets went down in that hole, so we may have the extension in wave 1. We'll just see how wave 3 travels anyway. 1 and 3 might be the same, so anyway, we'll just keep plugging away at that. But bearish, and we're looking for the next rally. So on the hourly chart here, I just want to remove a few things, shape things up a little bit. I'm a bit of a messy bloke. I'm just your average bloke. We're simple creatures. We're not like girls. They're more complex. They're good on the details. The 2 best Elliott wave traders I've ever saw was 2 girls. I mean, they weren't together; they were separate, but because it's paying more attention to the details, I think. Or maybe they're just more intelligent. I don't know. Anyway, so we were looking to short, but obviously that's not really going to be much help. I mean, something like that would have been nice if you could have caught that, you know. But anyway, that's that. But what I'm thinking now is that I'm not quite sure if we've got that low in place here, but we'll just start to shape things up. I'll put that, I mean, there's probably short covering and there's probably another little move down, so I'll do that to the 950 maybe. I'll just check on that, but it does leave us, what I'm just trying to find is this here. So let's just, and that ABC, look, it may not even go back up. It may just hit something like that and go down, you know. So I'll end up drawing something big like that that's kind of useful but useless at the same time. So we want that, but because we've got 5 waves here, we can also look to short it in the box. So we can turn the box green, and we may end up, you know, that we may end up just sort of dragging it down. See that little bit there? That's your, and that low there, that's your resistance. So what we should be doing is pulling that down further, but you know, when you're trading CFDs or leverage products or the SPY or whatever it is, it's a little bit, you know, you've got to be a surgeon, you know, not a butcher. Still, butchers can swing a knife pretty well, so I'll take that statement back, even though I'm a vegan. Yeah, so that's kind of what we're looking at. Let's just cruise into our 100-tick chart. Okay, you can see a bit more shape here now, so let's just quickly put this together. Oops. Does that go there, or is it the other way around? I'll just have a look at that again. I'll just finish doing the hard yards here. And we need one. Oh, I should have done the little green dudes too. So yeah, I think the main point here is not to chase this short. If you do, you'll have to be pretty quick. I think I could even go that way. I think that's... yeah, I think there could be a bit more to the downside here. The 50. There's also group 2 in here as well, so 172. Still, we'll see how group 2 is always good for a bit of support. And 65. Close enough for the time being. Yeah, I was just trying to figure out this, and I'm not sure. I thought that was... no, I have to go back with that. I have to put that there, but I just don't know if that should go there then. I'll have to work out those two. I can't push that any further than that. It looks kind of impulsive. I wonder if it needs to go over there. And then we got 1, 2, and 1 here, and 2 here, and 3, and 4, and 5. I wonder if that's 1, and 2, and 3, and 4, and 5. I'm thinking something like that, you know. So we'll just put this 1 and 2 here. And we'll call this wave 3 because it's gapped. And look, I could be wrong with this, but once the stocks open, that's going to force that down a bit. So I think... and then we had them. It's really all about this, you know, for the trading side of things, it's really all about this ABC pattern here that I don't think is going to come back up too far. I think it's going to kind of all hang around here a little bit, you know. Keep an eye on the S&P 500 as well. I mean, that's going to bounce off the 4,000, so that will give you, just check that low, check that the S&P BHP is bouncing off the 4,000. But that's about it at this point, I think. You might be able to do a better job than me with this. I just did it quickly. Rightio, so that's that. We know we're going down. The banks, so when they open, they will be going down as well. If I can just borrow one of the US banks here. So with the US banks, we're looking from wave A at the top here, down for wave A here, the B wave here, then wave 1 here, and 2 and 3 and 4. So the US banks are coming down. So I'm pretty sure, you know, we're going to be not far behind it in that regard, you know. So that's what we're looking for here. So that means that CBA, I mean, even though the stochastics are giving the buy signal here, I wouldn't bet on that. You could probably do a switch setup on the short side here as well if you wanted to, but I'll leave that up to you. So that's that. Over to the material sector. So this is iron ore here. As you know, we've been looking at 5 waves moving up here with an A wave and a B wave and a C wave here. Now I've got this counted up here as 1, 2, 3, 4, 5 for the A wave and A, B, C for the B wave and up for the C wave. Now I don't know if that's correct, but what I was looking for here, I would turn a bit more bullish here if we got support on top of 730, because that's the top of group 1 of this, and also if we got support on top of this, because normally you go to the 61.8% and fail, but if we found support on top of the 61.8%, well, that means that we're going higher at that point, and then I'll readjust things. And when I look at the Singapore exchange one here as well, I mean, it has lifted off here. I mean, because we could look at this as up for 1 here, an ABC pattern here, but really this has not moved up much. I mean, it's overlapped this, which is good. That's 1 box ticked, so it's looking good, but it's not strong enough to base any sort of move off at this point. So yeah, we'll just see about that. I mean, it's still in a weak situation. I mean, it's very normal for the market to come down and bounce off such a strong number, and then like a bouncing ball, the first one's the highest, and the second one is lower and lower, and then it just drops through and so on. You know, so that's that. We're also looking at some lithium stocks last week. But as I mentioned, they've got this move to the upside, so we haven't really gotten a pullback on this just yet on any of these. So maybe with the markets pulling back, we might see some sort of pullback on this that we can get into, but it still looks like 1 and 2 here, 1 and 2 here, 1, 2, 3, 4, 5 for the third wave or fourth wave. So this to me here looks like it's still got legs. It means, come on, where's my thing? There we go. So it looks like we can still go up here to finish that leg off, and then there'll be this leg and that leg here, and that will give us 5 waves up here. So we may even need to wait longer. So that was taken up from here as 1 and 2, and 1 and 2, and 1, 2, 3, 4, 5 for the third, fourth. So this one here would relate to this one, and this one relate to that one. So still a little bit more still to go up here. This one's slightly different, so but we do need that pullback. So whichever way we look at these guys, you know. The other thing was the lithium market. I didn't have a lithium commodity thing. I couldn't find that, but I found this ETF here. So yeah, so that's pulled down. So this is quite good. I mean, this could be, I have to be a bit careful about this because this is 1, 2, 3, 4, 5 here in A, B, C. So we could look at it as an A and a B and a C here and come further down. So we need this to balance off a little bit too here. We kind of want that support on the 40, on the 80 here as well. Want some classic trading levels pattern here to push that up further, because this is typical of what's happening in the with stocks. There's a difference between, there's the commodity, and then there's stocks, and sometimes you think the stocks should be running with the commodities, which they do, but then if the stock market is doing something that's like quite strong and phenomenal, well then the stocks, the ETFs and that will bend to the stocks rather than to the commodities, and you'll get that divergence between them. So we do need to be careful about that. But anyway, we'll get there with that. So I wanted to see if we get support on here. As I said last week, we're not there yet. It's kind of looking sort of okay-ish. Coming over to US BHP. So as you know, I've been counting, I haven't labeled them, but I was counting up here, and I could sort of see that we're at a top here. Now it could be counted as 1, 2, 3, 4 and 5 here. Commodities tend to can extend in the fifth wave just as much. So we were looking at US BHP as the ADR here. So just on 50 ticks here, we're looking at 1 and 2 and 3 and 4, and then counting up as 1, 2, 3 and 4, and 1, 2, 3, 4, 5. So I was picking that in as a top there last time we spoke. So let's just see if we get this ABC pattern in here now, okay, and that will give us a chance to go up. But because we've got 5 waves, I mean, we could look at this too as an ABC for the A wave here. I mean, it's possible. I mean, as an ABC for the A wave, the B wave, and the C wave here as a corrective move, because we don't have the extension in the third wave, and that means that wave A and wave C have got some sort of equality to them, which is not quite correct, but it's quite long. If the extension of this extension was in the third wave, that would make things more bullish at that point. But so now I need to be double careful, but we'll see. And also too that we were looking at not so much RIO. We need RIO to get up here further, and it could still fail from here based on what the stock market is, but we did see FMG push up nicely because we recognized that was a corrective pattern in here and it had to push up. So I don't know how to count this and how it'll all sort of play, but there's definitely 5 waves in that little move, and we've got 5 waves here, and now we've got this breakout here. Under the current circumstances, I don't know if you want to take the money off the table here for that, and then we'll wait for the setup to sit back on there, or you can just hold it. But I'll just, because of the current circumstances, I think we need to exit that situation, and we'll just see what we're up against at this point. But it does look like, to me it looks like some sort of ABC pattern here, and we've got some 1, 2, 3, a third wave up here, and a fourth and a fifth. So it'll probably get a little bit higher up. If it's no big deal to you, hold it and put the stop. Just put the stop at break even here, if that suits, and ask yourself if you're feeling lucky, because that's what it'll be a bit like, Anyway, that's that, and over to the gold market. So with the gold, we're looking at it, as you know, in a positive light. We're looking at wave 4 here with 1, 2, 3, 4, 5. But where's my GDX? Because we're also looking at, I'm very concerned about about the gold stocks, maybe they'll diverge from the gold itself. When we were speaking last time about this, we were looking for down for 1 and back for 2 and down for 3, 4, 5. So we've got that clear move down here, which kind of just, we haven't taken out the low here, but Newcrest Mining has taken out the low here. So I believe that I'm on the right track here. But that move down here, that can be, this up for 1 that I've got here may not be the case, and we need to look at all of this as wave 1 here, as I've mentioned before, and then back up for wave 2 here, right? And then we go down from that point. Now it has sunken quite low here. It's moved through the 61.8% mark. We can go long above here, above that top. I could probably bring that down, but I'll just leave it up out of the way here for a moment. And it has moved down past that, past that 61.8%, but that's okay, as long as it doesn't breach the low here. But it looks like it kind of wants to a little bit, doesn't it? So we can put that in here. I mean, it would need to bounce off that 30 and not breach it. So it still could, you know, come to here and then go up at that point, but it's probably more likely to continue down at this point. So we're not long. We haven't been trapped. We've been talking about it. I was fearful that that we could come, you know, that we needed to look at actually needed to look at this as wave one here. Oh no, wave one here. Yeah, right. Sorry. So yeah, this is looking a bit. I mean, I can count that correctively, or I can count it impulsive. That's not finished yet. So yeah. So anyway, nothing to do here except to monitor and wait. You know. And Newcrest mining, you know, that's will obviously come down a bit further today as well. It's taking out this low, so it's forcing this to be corrective, and we will come lower. So as a bet, I would be rather short than long on that. And before we go to the US dollar, we just want to have a look at at the 2-year government bond yields here. And as you know, I've got 1 and 2 and 1 and 2 and 1 and 2. We've got the third, fourth, fifth for the third. We've got the fourth pulling back, and we're looking to go up for the fifth. So we called in the low, we got the turn right, and now it's basically, you know, it's kind of come back and retested to find support on that. So the next step to the upside, which will be very helpful, so getting support on top of 3% at 3.30 here would be, if I get a tested support on top of 3.3, then we can call that wave 4 in low, because support on top of that will separate the market being pulled back by number 3 here, and it will look at 3.5, and that's almost brings it quite high up here. So the likelihood of an A and a B wave up here and a C wave becomes diminished a lot. So this should just cruise to the upside. The US dollar, this is my 38.2%, looking for a wave 4, and it has dropped below the 38.2%, but it hasn't overlapped wave 1 here. So I'm still going to stay with my wave 4 and label this an A wave here, then an A, B, and C for the B wave, and down for the C wave. And now we can look for wave 1 to the upside. So if you're going to go long in this or short in the euro on the flip side, or the pound, then you'll need to wait for that this pullback here and a corrective rally in the other markets. So we'll look at that when we do the commodities or the euro video a bit. So, but anyway, that's pushing up. So this pushes down. So yesterday, whenever we spoke, so we're looking at 1 and 2 and 3 and 4 and 5 in here. So we're looking for that top. We're looking for a short. Maybe you've shorted it under here. But anyway, the main gist here is that we can look for, like the other like the stock markets, like the S&P 500 and so on, and our local market, we're looking down for 1 and back for 2. Now, will that come down further? Is that 5 waves? I haven't had time to pull that apart, but it matters and it doesn't, of course. But all we need to do is wait for some sort of corrective rally, and then I'll look at the detail, and then we'll nail that down at that point. But this will be coming further down, so we don't need any of these here. So yeah, so we want this to land, and what we're really looking for is the ABC pattern here. So you can look for the 50% back and look for shorting it, you know, and if it moves up to because that's on 5 waves, then it's be pretty safe short pulling back into the 50-60% at that point. But anyway, that will take a session to do that, and you can just look at the stock market as well. You know, the stock market will be, everything will be the same. Everything will be the same but different. Same. Okay, that's it. Alrighty, thanks for tuning in. Cheers.